Why are mortgage rates so high in Mexico? Mortgage rates in Mexico are influenced by scarce capital, inflation, and risk factors. In Mexico, mortgage rates soar due to limited capital availability. Unlike countries with robust financial markets, Mexico faces scarcity. A shortage of banks amplifies this scarcity, leading to reduced competition. With fewer players in the market, banks have less incentive to lower rates, resulting in higher interest rates for borrowers. Additionally, banks carefully calculate mortgage rates by considering various factors. One crucial element is inflationary pressures. Mexico, like many developing nations, contends with inflation challenges that impact the cost of borrowing. As inflation rises, lenders adjust rates to compensate for the decreasing purchasing power of money. Risk is another pivotal factor influencing mortgage rates. In Mexico, economic and political uncertainties contribute to a higher perceived risk in lending. Banks mitigate this risk by charging borrowers higher interest rates. The overall risk profile of the country directly affects the cost of borrowing for those seeking mortgages. Exchange rates also play a significant role in determining mortgage rates in Mexico. Fluctuations in the peso's value against other currencies can affect the cost of imported goods and impact the overall economy. Lenders consider this volatility when setting interest rates, further contributing to the elevated mortgage rates observed in the country. Is it difficult to get a mortgage in Mexico? Obtaining a mortgage in Mexico, while possible, presents challenges compared to more competitive markets like the United States. Non-Mexicans can secure mortgages, but similar to the U.S., Mexican banks adhere to standard requirements. For Mexican mortgages, banks typically demand a stable income and may request proof of employment. They scrutinize credit history, assessing an applicant's ability to meet financial obligations. A down payment is a customary prerequisite, and the amount may vary based on factors like the borrower's creditworthiness and the lender's policies. Legal considerations also impact the mortgage process in Mexico. Non-Mexican borrowers might encounter additional documentation requirements, and legal intricacies could add complexity to the application process. Engaging legal professionals familiar with Mexican real estate transactions can facilitate a smoother mortgage application process for non-Mexican individuals. While obtaining a mortgage in Mexico may not be as straightforward as in some other countries, it remains a viable option for those willing to navigate the specific requirements and procedures. Working with experienced professionals and understanding the local nuances of the mortgage market can enhance the chances of a successful application. Which countries have the best mortgage rates? Several countries offer favorable mortgage rates, providing attractive options for potential homebuyers. Among these nations are Switzerland, Denmark, Japan, Sweden, and Spain. Switzerland stands out for its historically low and stable mortgage rates. The country's financial stability and conservative lending practices contribute to an environment where borrowers can secure mortgages at favorable terms. Denmark, known for its innovative mortgage market, offers low and transparent interest rates. The Danish mortgage system, featuring fixed-rate, long-term loans, provides security and predictability for borrowers. Japan's mortgage rates are notable for their affordability. The country's historically low interest rates contribute to a favorable environment for home financing. In Sweden, competitive mortgage rates are available, and the country's housing market is characterized by a well-established mortgage system with options for various borrower profiles. Spain, with its diverse real estate market, also offers attractive mortgage rates. The country's housing sector provides opportunities for borrowers to access financing with favorable terms. While these countries currently offer favorable mortgage rates, it's essential to consider the dynamic nature of financial markets.